first priority for us, with all businesses, is our people and making sure our people are safe. So actually on Friday we took the decision to globally effectively shut down all of our offices. So all non-essential staff have been asked to work from home. We're trying to help with the policy around social distancing, which we believe will be the thing that will help flatten this curve going forward. So that was the decision we took on Friday. It was a very tough decision, but I think it's the right decision to make in terms of our own personal safety for our people. Non-essential, that's all around non-essential staff. In terms of operations, we're then looking at what we're doing in terms of making sure that the operations are manned in a safe way and looking at rotation of staff and shift work and so on. So from that perspective, that's the sort of first primary thing that we're doing. And then from a markets perspective, we are looking at how we now look to rebalance the company going forward. The nature of our company is one which is exposed to volatility. We've been through this before. We've seen it before only 5 years ago, as we saw the oil prices drop from $110 a barrel down to, at that point, $28 a barrel Brent, and we're back down towards those levels. And we're making sure that now we have in place the right actions to allow us to manage that degree of volatility as we go through the next 18 months.
And what will those actions involve? Are we looking at another round of significant cost cutting?
Well, first of all, if you looked at the plans we laid out that I talked to you about only 5 weeks ago, targets for 2021, we had the company balanced around $40 a barrel Brent, was the key 5-year target we put in place 4 years ago. We're on track for that. In terms of where we are now, capital last year was running around about $15 billion. We've got flexibility to take that capital down by up to 20% this year if we need to. The cost base back in 2014, when the oil prices went from 110 to $28 a barrel in 16, we took something like $12 billion of costs out and $12 billion of capital out. So we're starting from a much stronger financial position than we did the last time we saw these sort of moves on the oil price. So we've got a lot of flexibility available to us. From our perspective for BP, as we talked about this 5 weeks ago around results when I was here, at the end of last year we built a wall of liquidity which we'd strengthened seeing what was happening with coronavirus when I was speaking. So when I talked about results for 4Q, we had about $30 billion of liquidity. I just juxtapose that, that in the thick of deep water rise in 2010, we were sat with $2.5 billion of liquidity. So we have plenty of firepower within the corporation to deal with probably what's now going to unfold over the next 18 months. And you asked, you said about this double whammy. We've got a combined issue of COVID-19. We don't yet know what the demand is going to look like. When I spoke to you 5 weeks ago, we thought 300 to 500,000 barrels a day will be off the market. If you ask me that question today, it's more like flat demand year on year, maybe even negative demand. I mean, you're seeing from Steve himself in terms of what's happening with airlines. We could probably likely see negative demand this year. And then we'll need to see through what does the new normal look like in terms of activity in business. Your previous speaker about when businesses get back to whatever the new normal is. So we've got a demand side shock. And then of course we also have the combined issue of a significant amount of oil now coming on the market in April. So that could only lead, really, the direction for the oil price can only go in one direction, that's down. So from our perspective, we will look to do everything we can do to manage the volatility for our shareholders.
Hi, I'm Joanna Bersecci and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.